Dave, good to see you again. Last time we talked, we were talking about rapid growth, how you were doubling on a very rapid clip your revenues. But let's talk about multi-cloud, since that's driving a lot of what you do. To what extent are customers, enterprises, more and more moving to use multiple clouds and finding complexity in how to manage that?
Yeah, hey, John, thanks for having us. It's very, very clear. Most companies, whether by accident or by design, end up using more than one cloud provider. And you can see that really from just the math of the earnings from Amazon, Azure, and Google. They're all growing really fast. And so, absolutely, I think it's sort of an inevitable trend, truthfully. Most of the applications we use today are built on cloud infrastructure, sometimes on Amazon, sometimes on Azure, sometimes on Google, sometimes something else. But inevitably, most companies end up being multi-cloud.
And so when we think about the DevOps group, of which you are going to be a big and important part, it looks like, with the way you're coming into the public markets, how do we think about the growth of that as we also look at the growth of not just cloud infrastructure, but also demand for applications, demand for storage and analytics and AI?
Yeah, I think our thesis all along was that markets go through transitions once every 30 years or so, and the next transition is from people running private infrastructure to cloud infrastructure. And the catalyst for that is new applications. Like when people talk about digital transformation, what they really mean is building net new applications. So in terms of the secular trend, if the last 18 months have taught us anything, that applications are ever more important to how we connect to our lives together, and that is going to continue. So we're certainly committed to the long-term view of enabling companies to adopt a consistent way of running infrastructure to support their application deployment objectives. And I think we've obviously grown a lot to date as we pursue that, and that's really what we're doing this for.
How much consolidation do you expect to see in this space, and to what degree will the funds you raise both go to that, and will your stock help to act as a currency to do more of that?
I think the catalyst for us really is I think first and foremost, we think the operational discipline of being a public company is good for us. And number two, we think it's an important thing for our customers to see that we're in the governance of the public markets. And as an infrastructure vendor, that's just a reality of what we do. So I think that's really why we're doing what we're doing. These are really, really big markets. As you know, we actually have 8 distinct products already in our portfolio. And so we're at the present time very much focused on continue to innovate those through kind of the journey of open source, as our products are, as you know, all in open source, and then transitioning those to the commercial relationships with customers. And we have a lot of work ahead of us on that particular path.
Dave, I'm curious as to how you thought about this IPO process. Was it important to you to allocate a proportion of shares to SoFi or another trading platform that lets retail investors get in pre-IPO listing and perhaps pre-pop, although we haven't seen the stock start trading quite yet?
No, I think we ran a relatively predictable process. Infrastructure software is infrastructure software, and it's I think one of the things that's our reality is we play this quiet enabling role underneath some of the most important applications on cloud, and so that's not necessarily a consumer-oriented sort of thing that people are aware of. So we took a very traditional approach, and we left it in the hands of our partners and advisors.